Welcome to Binance Blockchain Week 2025. This is the best way to round out the end of 2025. It's been an amazing year for crypto. A little tumultuous lately, but that doesn't take away from what the future holds. Today, I get to speak about the future of stablecoins, about the future of on-chain banking, and about the future of crypto and blockchain in general. So really excited to have you join me here at Binance Blockchain Week.
Look at this. Packed audience here in Dubai. Binance, thank you very much for having us. This is truly remarkable. It's great to be here with all of you and to talk about something that's dear to my heart, which is the adoption, scaling, and eventual proliferation of crypto. It's a really important topic. It's why kind of all of us are here. It's the subject of much conversation on the internet. And very fortunately, I've got three of the world experts here to discuss it. So I'm going to let each introduce themselves, and then we're going to go straight into it. So Avery, why don't we start with you? Who are you?
Avery Chang, CEO, co-founder of Aptos Labs. If you've heard of BBW from Meta, Facebook, I was tech lead for the project. And so I've been working on blockchain for over 7 years and very, very excited about what the technology and product can do for this space.
Fantastic. And Reeve?
All right, nice to see everybody here. My name is Reeve Collins. I've been in the space since the beginning, really to concept the idea of the stablecoin with Tether and then a handful of other projects. And now I'm the chairman and co-founder of Stable and WeFi. WeFi is an on-chain bank. And Stable is the evolution of the stablecoin, Stablecoin 2.0. So we've seen where it's come from over the last 10 years. Now we can talk a little bit today about where it's going.
Okay, and Zach.
Zach Wyckoff. I'm the co-founder and CEO of World Liberty Financial. Our flagship product is USD1. It's stablecoin. I believe the only native stablecoin today on BNB chain.
Okay. Well, we have lots to discuss, but I want to start with kind of a set-in. So Reeve, you've been here for a really long time in this industry. You and I know each other for about 10 years almost now. We're talking about scale. Where are we now? Like realistically, how many people are actually using crypto, do you estimate?
Well, I read recently that Tether said they had about 500 million users, and that's just their one account, company. And so there's probably 1 billion users of crypto around the world. And so it has reached, it's reached mainstream narrative. The utilization of crypto is getting easier. A lot of companies are trying to make sure it's smoother to onboard and utilize. But the people who haven't leaned in yet to truly bring this scale that we're all talking about, we're all waiting for, is the institutions.
I've got to say, backstage, Peter Schiff was saying that, of course, he may not be crypto's biggest fan, but was saying that there's fewer people using crypto than you'd think. Avery, do you think that's true?
I definitely think that's true, by the way. I mean, we started off with building what Libra and D would be at Meta. We were envisioning what you could have with MasterCard, Visa, Uber, Lyft, Instagram, all those conglomeration of customers having a 24/7 payment around the world that transfer money seamlessly, instantly, quickly. But today, I think the truth is, like in crypto, we still have very, very few customers out there. A lot of the customers that use crypto are using it through centralized exchanges like Binance. And for the on-chain traction, it's still like a very nascent thing that's got to happen.
But I mean, it's super important. Isn't the goal here, I would think for all of us, for this to be adopted by millions? It's pretty much the mission statement of World Liberty.
Yeah, I mean, listen, I think we're well on our way. I think that, the global sort of capital of the world, if you will, the United States had a very challenging regulatory environment for, a number of years under the Biden administration. You've now seen that obviously reverse course. It's allowed institutions to sort of dive in. But even in the United States today, right, Genius bill was passed, but a lot of the rules and regs of Genius haven't been effectuated yet. So I think, once that happens, you'll start to see more institutions dive in, but we're already seeing it today. USD1 was used as the stable coin of choice to close the largest transaction using crypto of all time, which was MGX investing in Binance, right? I don't think 5 years ago you would have seen, a $2 billion deal occur in stablecoins, but you're seeing that kind of stuff today. And I think it's, you're going to see more and more of it over the next couple of years.
I mean, we saw it last year in 2024, and this was under the Biden administration, and with, I would say, lesser technology than exists today, Reeve. Officially, stablecoin transactions eclipsed Visa and MasterCard transactions. I mean, it's remarkable. And that was in 2024. But stablecoin 2.0 is coming out. Where do you go from here? How can we're already beating Visa and MasterCard. What's up next?
Well, what's up next is more trust and again, more institutional money. And so larger volumes being pushed through these systems. Because what is a stablecoin ultimately? It's a new, better way to move money globally, instant and for free. And initially outside of the banking institution. But over time, once the governments have seen how valuable it is and how powerful it is to move money in that way, they're regulating it more and more. And now the banks are getting involved. But what's going to happen in the future is better, more transparent collateral. All the collateral will be on chain. And then the ultimate thing and the difference is who gets the value from this new digital dollar? To date, the people who are getting the value are those centralized institutions. And in the future, that value can be distributed to the people putting the money into the system.
But right now, we don't see that much institutional adoption. I think Zach made a great point. The MPX investment into Binance was probably the first very large transaction we've seen settle. But there's lots of large transactions that happen all the time through wire transfers, through ACH, and through other kind of like old school means that are really not quite as traceable. I mean, how many times have we seen movies where maybe Ben Affleck has to rifle through pages to go through a transaction? But this could all be sitting on the blockchain, couldn't it?
Absolutely. I think when people think about the technology side, definitely on the regulatory side is actually there's a lot of progress. We see more than, I think 6 of the major stables, USDT, USDC, PYUSD, USD1, and others on top of Aptos, and adoption picking up very much across the board. There's still a lot of work to be done, right? Like, in particular, there's this, concern about fragmentation that's been happening within the market around stables.
It's a real fear, no?
It is a real fear, but I think ultimately I'm not concerned. And the reason I'm not concerned is because, as you brought up earlier, it's about who generates the value. And what will happen is like stablecoins are very different than fiat in my wallet. I can convert from one stable to another on a blockchain, using Aptos in like under, half a second at less than 100th of a cent, which means that every dollar can be transferred into any other kind of currency in the world or any other type of dollar instantaneously, making it seamless to the user, seamless to the product experience, and just a worldwide currency that anyone can access.
Well, so stablecoins, look, they've certainly been the big story of 2025. I think there's no question about that. It seems like after Bitcoin anyway, and maybe the use of Ethereum for ICOs, it's been a real killer use case for blockchains, right? Dollars are simply better when they're tokenized and put on a blockchain. But Zach, there's a lot of talk about kind of what can be next. And there are these 3 letters that keep popping up, RWA. What does that mean? What's an RWA? And is there a real future here?
Yeah, I mean, I think I know there's a real future. RWAs are real world assets. We'll be launching our own suite of RWA products in the beginning of the first quarter of January. I think it's just a way more efficient way of equitizing projects, right? Whether it be real estate, oil and gas, different commodities. I agree with Reeve that, I think all collateral will end up, being on chain. And, this is just a way more efficient way to do things than the traditional financial system. So we're excited to launch our own RWAs that, of course, will be, using USD1 as collateral in the beginning of the first quarter.
That's very soon. Here we are already in December. Reeve, I mean, it's been a long time coming. People have talked about the concept of real world assets going on chain. What have been the roadblocks to date, and have we surpassed some of those so far?
Well, it's a great question. Let's go back to 2018. These used to be called security tokens. The only difference, 7 years later, is the name. But the real difference is the regulatory landscape. So what's the roadblock? In 2018, when security tokens came out, everyone said, let's do tokenized assets, but do it in a regulated manner. It still got shut down. So the regulatory landscape has shifted. So now traditional assets can be tokenized and put on chain. But the real benefit that comes from that is these traditional assets still have their same features and functionalities and yield. However, when you put it on chain, you get incremental utility. And when you get incremental utility,
Sorry, what does that mean, incremental utility?
you can do more with it. and therefore the yield's going to go up with roughly the same risk profile. So now you have smart contract risk, but the yield goes up. For instance, what's going to be the best use case for RWAs? It's going to be as collateral for stablecoins. Right now, you've got treasuries off-chain, but if you put the treasury on-chain and then use it as collateral for a stablecoin, you get to do more with it, and so you get more yield out of that same type of transaction.
I mean, that's Ethereum. We're talking about the treasury market, which is the largest market in the world. Even a tiny incremental amount of margin, or yield, I should say.
Because you're going to get more utility out of it. For instance, let's say you hold a treasury traditionally. You're making 3 to 4% and it sits in your bank account. Let's say that same treasury is now tokenized and it's now collateral for a stable coin. You get the yield from that treasury, but you also get the stable coin. Just like Tether makes all its money from yield while you spend the stable coin. Imagine if it was you making the money from the yield while you spend the stable coin. So you get the yield and utility.
Well, look, there's some technological challenges indeed. I mean, look, the regulatory atmosphere is certainly one thing, Reeve, and that's no small feat that we've come this far. But on the tech side, Avery, I mean, the infrastructure wasn't there. Let's be honest here. I mean, a few years ago, CryptoKitties brought down effectively the crypto internet, right? So people forget that. Where are we now?
I think the technology has improved a ton. But the other thing that is, as we talked about, the regulatory landscape has improved a lot. And the experiments that BlackRock, Franklin Templeton, and Apollo have been running on chains like Aptos to tokenize money market and other funds there has shown them that they can actually save money around the management side. So it's not just about the income to use of a collateral to kind of generate dollars to be spent and purchasing other things, but the management fees are simpler for these products, and they're more transparent. And I think that as these assets start to make their way throughout the world, not just within U.S. markets, they would just generate more excitement and more demand for those products that didn't exist in the past. From a technology standpoint, I think we're in good places there. I think the kind of thought process we have for Aptos is usually tokenization of financial assets, tokenization of data and AI assets, and then a way to treat all these assets together on chain is like the future of all of the financial world.
World Liberty, of course, Zach, is perhaps the highest profile project in this industry. There's lots of detractors. There's a lot of supporters, too. And so far, you've launched USD1, which went off to a record-setting start, billions of dollars, I guess, very, very quickly. And you've gone across a number of different chains, including Aptos. What has been, for you, the most surprising thing in launching a stablecoin? Reeve, of course, did this many years ago, but it was a totally different atmosphere. In an environment where everyone's watching, what's been most surprising?
Most surprising, that's a good question. Yeah, I mean, I don't know if anything's really like sort of caught us off guard or has been the most surprising. I mean, it takes an incredible amount of work to, build distribution and, get the fungibility that you need to actually have and, a very fungible, usable stable coin, right, that can generate yield and, can go out and have real world utility. But I don't know if anything's sort of been like the most surprising to us. I mean, I would say what's been really effective for us is that we've been, chain and exchange agnostic, right? And we've, natively minted on Aptos, we've natively minted on BNB, we've natively minted on Solana, and,
that was controversial. I mean, it used to be the playbook was you pick a single chain and you build there. Why go agnostic?
We think it's really important, right, to sort of meet these chains where they're at, right? I mean, who wants to, you can deal all day with bridging back and forth, but, at the end of the day, like a natively minted stable coin is just, it plays a lot better in these respective ecosystems. So, we made that bet, and I think it's been a pretty good bet.
Reeve, in your past, of course, you built a number of different companies in this space. And one of the hardest part is kind of striking deals with enterprise. They very often have very long sales cycles, and things could fall through, whether it's at the pilot phase or whether in production. I see Avery nodding his head. I think he's seen this movie once or twice. As we're talking about digital money at scale, we're going to need these institutions in there. We're going to need some of these deals to close. So can you take us through like the kind of how things have occurred, or how things have progressed? Can you make deals happen nowadays? Like, do enterprises actually sign contracts now?
Look, years ago, I started a process with Visa of another company called Smart Media Technologies. And it's a Web3 wallet and a tokenization platform and really focus on advertising and loyalty. And it took 2.5 years for us to navigate through that world. Prior to that, I spent a year doing Amex. That fell apart. But Visa, happy to say, we've signed a deal, and Visa's utilizing Smart Media's Web3 wallet and their technology to roll out loyalty points and tokenized loyalty points across to their vendors. So it's doable, but that one took 2.5 years. And the level of diligence and the amount of time it takes is crippling, especially crippling to a startup because like when the Amex one fell apart, that was a huge blow. If Visa fell apart, that'd be a huge blow. You have to be able to survive that course. And when you're a startup, it takes even longer because of the amount of due diligence these large institutions do. And a lot of the crypto companies have an incremental issue if they issue a token. Especially in the past, large institutions would not do a deal with you because you have a token, so it's too much regulatory.
They saw that as a legal risk.
Absolutely. But today that's changed. And it's really significant, that fact. Like, look, I say it on every single panel, right? And we all know how much the regulatory winds had shifted. And that's been the biggest boon to the space. When you talk about scale, that has laid the foundation for scale. Because what does scale really mean? It means trust. There's a lot of people using it. There's a lot of money flowing through crypto. But to get the real dollars, it's trust. And it's trust that the big institutions aren't going to get in trouble by their own governments. That's regulation. And we're there. All the signs are pointing in the right direction. We're finally there to hit scale over these next few years.
Zach, we're here in Dubai, and Dubai has been particularly progressive in coming up with a clear schema or a way to do business as a crypto company. Can you tell us kind of what the difference is like when you're working, let's say, with a government like here in Dubai versus maybe a place that's a little bit less organized as a token issuer yourself?
Yeah, I mean, it's not just Dubai, by the way. It's the whole Emirates is incredible. You know, like I said, I think the United States has gotten a lot better. So, you know, I wouldn't say, like, to be honest, today, I actually wouldn't say there are too many hiccups in the United States, but I think the UAE has been leading the way for a really long time because they know how to get to yes quickly. They don't let, you know, little things slow them up, and they understand that this is an incredible technology that's, you know, frankly superior to what exists in TradFi today. You know, I think what you're seeing in the US today is they're figuring out now how to get to yes quickly, right? You're seeing the OCC start to grant, you know, limited trust charters to a bunch of stablecoin issuers. You're seeing, you know, the U.S. start to talk about opening the Fed window potentially to stablecoin issuers, right? So the U.S. is getting there, but the UAE has been doing this now for, you know, a few years, and, you know, are certainly, you know, a class leader in this space. It's a pleasure doing business here. It really is.
You know, Avery, I've got to kind of go back to our former question there, but with a little bit of a different spin. You were on the inside at Facebook, which of course had this big Libra project that for many of us in the industry, we thought that was going to be the first time that 2 billion or so people at once could have digital wallets. That was at least the hope for many of us in crypto. Many had fears too, but then it got shut down. First, what did it feel like? I know you probably signed a million NDAs, but what did it feel like as kind of that project fell apart? And then what made you say, you know what, we're going to take this and run with it anyway in a different enterprise?
I think there was a night that I went to sleep thinking that next day we're launching mainnet, and we got some calls that let us know that wasn't going to happen, and you know, the next day was what's next. And so after starting to dig through those processes and kind of reflecting back on what we're trying to accomplish, it just wasn't the right time, right? Like the administration wasn't there, the country wasn't there. Look, we're just trying to pass these acts now around unstable, clarity, genius, and move the country forward. And we're seeing a lot of that being reflected across the world. And I think Zach's completely right that places like the UAE and others have been very much at the forefront of driving this process forward and being more forward thinking. But I would say, yeah, we see now is the best time to actually onboard all these people. And a lot of this will happen behind the scenes, right? Like people think about the chains, this, chains, that, you know, is it important to have, like, you know, you talked about the multi-chain strategy out there. What's really going to drive the adoption is going to be the product side. and the applications and the use cases here. And so having integration into a Facebook, integration into a Stripe, or integration into an Amazon, or even places like Geo in India, which have the largest consumer bases in the world, which just came from BBW. These places will drive the adoption, and crypto will really fade behind the scenes into a place where it's just a better Swift, and nobody thinks about Swift that much from consumer level. People don't think of it on a unit basis from a product level. Like, we don't use Facebook and think, wow, I'm really glad it's using MySQL under the covers. Like, it's really about the product experience that drives people to a platform, and ideally the utility that's going to bring in terms of, having access to money that can be transferred immediately from one country to another, having the ability to invest that money very quickly and rapidly, and also being able to kind of transact anyone across the world in lightning speed and a very low cost, like you can do in Aptos.
I think that's a great argument for crypto. And I'm not trying to rain on anyone's parade, but of course, we've seen some recent, after it was October 10th, some price action. It was a little bit negative in the industry. And I'll tell you what, there's been a lot of headlines talking about. It was actually, I think it was just yesterday, the Wall Street Journal was talking about the Bitcoin rout. There was this giant rout. Of course, the next day it was fully recovered, 100%. But
Those tend to be bottom signals, by the way.
oh yeah,
Get all the newspapers talking about how Bitcoin's getting hammered. Your mom's calling you, your cousin's calling you, saying, "Are you all right?"
yeah.
So the prices are down. Those tend to be bottom signals. I guess I'm not too worried.
So you're bullish.
I'm bullish. Listen, I don't really check. I don't know about anyone else. I can't speak for anyone else, but I don't really, check the prices day to day. I believe in the long-term health of this industry and, the long-term growth of, major assets like Bitcoin, ETH, World Liberty Financial. And so, I don't, trade in and out every day. And yeah, I guess you could call me bullish.
You sound like a crypto veteran. I was going to say, Reeve. I mean, you look a lot younger than you are. Let's start there. And you've been in crypto for so long, you could have even more gray hairs than I do. So honestly, how well do you sleep at night with the volatility here? And then here's my real follow-up when we're talking about adoption. Is the general public prepared for the type of volatility that we've seen in this industry? I mean, we are used to 30% swings. Yeah. But can an average person handle that?
But it depends on what you're talking about. Because it's not about prices. It's not about buying tokens. It's not about making money in that type of market. That's not what we're talking about. We're talking about creating technology that changes the way the world does business. Like you mentioned, it's not good for it's not good for your personal health to check the prices every day, right? Especially being in crypto forever. And should the general public check it all the time? For sure, if they love to gamble, if that's what they're in it for. That's not why we're here. We're here to build world-changing technology. We're here to build technology that connects the rest of the world to an infrastructure that they can participate in. And that's what stablecoins really have delivered. Think about people that weren't fortunate enough to be in the very developed countries. Now they have access to the US dollar outside of banking institutions. It's changed the way hundreds of millions of people now live and transact. And it's just going to get better and better in the future. And so when you say, is the public ready? Are they ready for crypto prices? I don't know. Do they like to go to Vegas? If so, yes. If not, just use the technology. Don't invest in it. But the technology is here to make real change.
And you think the technology is mature enough where hundreds of millions of people can rely on it for everyday transactions, for paying their mortgages, perhaps paying their taxes one day?
Yes, and the technology is coming, and each way that it's getting implemented has its own set of regulations. So you say, will someone pay their mortgages with it? Well, whatever service they're using that a mortgage company is accepting, ideally has gone through enough checks to ensure that it's safe. Because there's a spectrum. There's a lot of startups that are crazy, a lot of meme coins that are worth nothing, right? But there's a lot of technology that's battle tested, bulletproof, audited, and there for mass scale and institutional adoption.
So, Zach, who do you want to be the users at World Liberty Financial? Who do you see as your target demographic going forwards?
Everyone, institutions, retail. We think stablecoins are going to be a multi-trillion-dollar market cap, and a multi-trillion-dollar market cap means, global adoption. That means, everyone from, Tim and Sal in Ohio to, big institutions in Southeast Asia and Europe, right? So, our target audience is quite literally everyone who's using dollars today.
And Avery, at Aptos, you guys are extraordinarily ambitious. Do you think the technology can scale so that millions or actually billions of people geographically distributed with totally different workloads and workflows will be able to use this tech?
100%. I mean, we designed it at Facebook, at Libra and Diem to be supporting, the world scale population. But I think today you're also seeing AI agents and agentic technology being like the population is not enough. Everyone's going to have 10 to 100 agents acting on their behalf in the future, transacting microtransactions here and there, different services. So we're not going to be scaling for just 10 billion people. We're going to be scaling for a trillion agents acting on his behalf. And that technology is what gets us excited about what we're building. The 10/10 events were very interesting when crypto markets went crazy. I look at that as an amazing opportunity to say, if all those transactions happen on chain, what a better place that would have been. We would have understood when liquidity was pulled, how it was pulled, why all deleveraging happened. All these kind of different events would have been transparent, would have been accessible to everybody. And we think ultimately the global marketplaces, that are not really fair environments for everyone today, when they move on chain, will be in a globally equal place and a just place for us to all trade, interact together.
An equal and just place, online, on chain, was for using USD1 and other stablecoins. Fantastic. I love it. Well, thank you all very much for listening to us. Thank you, panelists, for this exciting conversation. And thank you, Binance, for hosting us.